Welcome. In this video, we're going to walk through how to claim the Research and Development Tax Incentive for the very first time, one of the most valuable and most misunderstood incentives available to Australian businesses. I'm from the advisory team at Quantum House Australia, accountants and tax advisors, and over the next 15 minutes or so, we'll take you through the entire process, step by step. Before we dive in, here's what we'll cover. We'll start with why this incentive matters and how much it's actually worth. Then we'll work through the 6 core steps of a first-time claim: confirming your eligibility, understanding the registration deadline, documenting your activities, calculating your expenditure, lodging your registration with Aus Industry, and finally, claiming the offset through your company tax return. Along the way, we'll look at a worked example, the mistakes that most commonly trip up first-time claimants, and how we can help you get it right. If you take one thing from this video, let it be this: a successful R&D claim is built on preparation, not on paperwork thrown together at the last minute. So why does this matter so much? The R&D Tax Incentive offers eligible companies a refundable tax offset of up to 43.5% of their eligible R&D expenditure. For a small or medium business investing in genuine innovation, but not yet turning a profit, that can mean a real cash refund landing in the bank, not just a paper deduction. It's one of the very few Australian tax measures that can put cash back into a loss-making company. But there's a flip side. The requirements around registration and documentation are demanding, and over the past few years, the ATO and Aus Industry have significantly increased their review and audit activity in this area. Claims that aren't properly supported are being challenged, so the opportunity is real, but so is the need to do it properly. Let's quickly set the scene. The R&D Tax Incentive is jointly administered by 2 bodies. Aus Industry, part of the Department of Industry, Science and Resources, assesses whether your activities qualify as eligible R&D. The Australian Taxation Office then deals with the financial side, your expenditure, and the offset itself. That 2-body structure matters because a first-time claim involves 2 separate processes: registering your activities with Aus Industry and then claiming in your company tax return with the ATO. There are also reforms to the program that have been announced for future years, but for the claims you're preparing now, the rules we're describing are the ones that apply. Keep that distinction between the 2 regulators in mind as we go. It shapes everything that follows. Step 1 is confirming your eligibility, and that has 2 parts: who you are and what you do. Let's start with who you are. To claim, you generally need to be a company incorporated in Australia. Foreign companies incorporated in a country with which Australia has a double tax agreement can also qualify, provided they're carrying on the R&D activities through a permanent establishment here. Sole traders, partnerships, and most trusts can't claim directly. So if you're operating through one of those structures, this is something to discuss with your advisor early, because it may affect how you should be set up. Settle the entity question first, before you spend time on anything else. Now to the more nuanced part, what you actually do. The legislation splits R&D into 2 categories. Core R&D activities are experimental activities, whose outcome can't be known in advance, and which can only be determined by applying a systematic progression of work, based on established science, to generate new knowledge. Supporting R&D activities are things done directly to assist that core work. The key words are experiment, uncertainty, and new knowledge. You must be genuinely trying to resolve a technical unknown, something you couldn't simply look up or work out from existing knowledge. If a competent professional in your field could have told you the answer in advance, it probably isn't eligible. This is where a lot of first-time claimants go wrong. So let's be clear about what doesn't qualify. Routine work, even if it's technically complex, isn't R&D if the outcome was reasonably predictable. Market research, market testing, and sales promotion don't qualify. Quality control and routine testing of existing products don't qualify, nor does simply applying an existing technology in a new setting if there's no real technical uncertainty involved. The classic mistake is to assume that because something was difficult or new to your business, it must be R&D. The test isn't whether it was hard for you, It's whether the outcome was genuinely uncertain to a knowledgeable professional. A preliminary eligibility assessment with a specialist is the single best way to avoid claiming activities that won't stand up. Step 2 is the deadline, and I want to be emphatic about this one, because it's where claims are lost before they even begin. Your registration with Oz Industry must be lodged within 10 months of the end of your company's income year. For a business with a standard 30th of June year end, that means the deadline is the 30th of April the following year. If you miss it, the claim for that year is gone. There are no extensions and there's no discretion. That's it. Because preparing a quality registration takes real time, gathering your technical descriptions, your records and your expenditure, we strongly recommend you start the process well before the deadline. Ideally, begin in the September to December quarter after your year end, so you're never scrambling in April. Step 3 is documenting your activities, and this is the foundation everything else rests on. The single most important principle is that your records must be contemporaneous. That means they're created at the time the work is being done, not reconstructed months later when you decide to claim. For each activity, you should be able to show the new knowledge or technical capability you were seeking, the specific uncertainty you faced, and why existing knowledge couldn't resolve it, the experiments or systematic work you carried out, and the results you observed, including, importantly, the experiments that failed. Failed experiments aren't a weakness in a claim. They're often the clearest evidence that genuine R&D was taking place. For first-time claimants, this is usually the hardest step, because many businesses have done perfectly eligible work but simply haven't kept records in this form. The good news is that going forward, it's very fixable, with the right systems in place from day one. Step 4 is calculating your eligible expenditure. There are 4 main categories to think about. First, salaries and wages for employees directly engaged in R&D, and where someone splits their time between R&D and other duties. You apportion their cost on a reasonable, documented basis. Second, contractor fees for R&D work performed on your behalf. Third, materials consumed in the course of your experiments. And fourth, certain overheads that are directly attributable to your R&D. Each category has its own rules and its own evidence requirements. There's also a minimum spend. You generally need at least $20,000 of eligible expenditure to claim, unless you're using a registered research service provider. The 2 errors we see most often are overclaiming, sweeping in costs that aren't really tied to eligible activities, and underclaiming, where businesses leave legitimate money on the table because they didn't realize a category was available. Let's make this concrete with a simple, illustrative example. Imagine an early-stage software company with no tax profit yet that spends a year developing a genuinely novel algorithm. They're not sure it can even be done. That's the technical uncertainty. Over the year they spend, say, $300,000, $200,000 on developer salaries directly on the project, $50,000 on a specialist contractor, and $50,000 on cloud computing and materials consumed in testing. If those activities and costs qualify, a 43.5% refundable offset on $300,000 is around $130,000. Because the company is in a loss position, that offset isn't just reducing a tax bill. After offsetting any tax payable, the balance can be refunded to them in cash. For an early-stage business, that can be transformative. I'd stress this is a simplified illustration, not a promise of outcome. Every claim turns on its own facts, but it shows why getting this right is worth the effort. Step 5 is lodging the registration itself. This is done online, through the business.gov.au portal, using Oz Industries R&D registration form. You'll describe each core and supporting activity, the dates over which they were conducted, and your estimated eligible expenditure. This is where all that contemporaneous documentation pays off. The more clearly and specifically you can describe your activities, your uncertainties, and your experiments, the less likely your registration is to be queried. Oz Industry may ask for further information or review the registration, and a vague or generic description is far more likely to attract that kind of attention. Precision and evidence are your friends here. Step 6 brings it home. Once Oz Industry has registered your activities, you claim the offset through your company income tax return, using the R&D Tax Incentive schedule. The figures flow through to your return as a tax offset. Now, the type of offset depends on your size. If your company's aggregated turnover is under $20 million, you receive a refundable offset, and that's the key feature for smaller businesses, because any offset remaining after reducing your tax payable to nil is refunded to you in cash. If your aggregated turnover is $20 million or more, the offset is non-refundable. It reduces tax payable, and any excess is generally carried forward. One word of caution: the registration and the tax return must line up. The activities and expenditure you claim in your return need to match what you registered with Oz Industry. Inconsistencies between the two are exactly the kind of thing that triggers a review. Before we wrap up, let's gather the main pitfalls in one place, because forewarned is forearmed. First, missing the deadline. That 10-month window cannot be extended, and a late registration forfeits the entire year. Second, inadequate records. Documentation reconstructed after the fact rarely survives an Oz Industry or ATO review. Third, over or underclaiming expenditure. Both create problems, one by inviting scrutiny, the other by leaving money behind. Fourth, misjudging eligibility, treating routine or commercially predictable work as R&D. And fifth, inconsistency between your registration and your tax return. Almost every one of these is avoidable with good advice and good preparation. This is where we come in. Quantum House Australia are specialist R&D tax incentive accountants and tax advisors. We manage the whole process end to end, starting with a preliminary eligibility assessment so you know where you stand before you commit time, then building your technical documentation, calculating your expenditure, preparing and lodging your Oz Industry registration, and finally, claiming the offset through your company tax return. Crucially, we build every claim to withstand ATO and Oz Industry review, contemporaneous, defensible, and complete. We work with first-time and repeat claimants across technology, construction, medical, and manufacturing. And where a matter needs legal input, for example, complex structuring or a dispute, we can draw on our colleagues at Australian tax experts, tax advisors, and lawyers, so you have both the accounting and the legal expertise in one place. So if you think your business might have eligible R&D activities, or you're simply not sure and you'd like to find out, the best next step is a conversation. Quantum House Australia offers an obligation-free initial assessment. We'll help you work out what you can claim and how to prepare it properly. You'll find us at quantumhouse.com.au or call our Sydney office on 1300 809 697. Thanks for watching, and we look forward to helping you make your first R&D claim with confidence. Quantum House Australia, accountants and tax advisors, setting a new standard.